Let's move on to the first, and what we're about to talk to in today's year trade is the paint sector, which has been buzzing in trade today. And with me to join in on the conversation is obviously Agam as well as Mahima, who tracks the space very closely. Well, we have counters like Indigo Paints, Berger Paints, Asian Paints, Kansai Nerolac, as well as Grasim Industries, which have all advanced in days today. Indigo Paints up intraday high of 5.9%, 8.8 times the 30-day average in terms of volumes, and all the counters in that space as well. And this is mainly on the back of oil prices, which have witnessed a very bearish trajectory. The latest trigger was the 5% intraday low that Brent crude prices hit yesterday. Brent prices fell below the $75 mark for the first time since Jan. Now, this fall is actually a positive for the paint industries because a lot of the raw materials of the paint industries, this includes your solvents and your resins, are actually crude derivatives. And raw materials do account for around 50% of the total cost, and out of these, cost of crude can make up 30 to 35%. So lower oil prices means lower raw material costs and thereby lower production costs, and these reduced production costs obviously aid to material margins, and they also allow and enable price hikes which have returned to the industry. So Mahima, can you just give us more of an outlook on how the industry is set to perform in FY25?
Right. So the thing is that Q1 FY25 in terms of volumes, they grew at a stable rate. However, margins were disappointing for all paint companies. In terms of Asian Paints, it was a soft quarter along the expected lines because of elections and a lot of other things. Berger Paints was ahead of the industry growth in decorative and industrial business was muted. In terms of Pidilite, it was glued to growth. However, margins were stable. And in terms of Indigo, well, the growth was good as compared to other paint companies. Now, in terms of what these companies have said in terms of the commentary for FY25 overall, they're expecting a double-digit volume growth by the end of FY25. Rural markets are picking up, so this means that the demand will recover and hence the volumes will pick up. In terms of B2B business, it is expected to pick up from the second quarter of FY25, and crude oil and other raw materials are near almost 1 year low now, and because of which the margins are likely to expand slightly. Now, in terms of margin guidance, Asian Paints has said that their margins will remain within the range of 18 to 20%. For Berger Paints, it is 15 to 17%, and for Pidilite, it's roughly 22 to 24%. But while a lot of brokerages have remained cautious on these paint companies, Nuvama had recently come out with a note where they've maintained an anti-consensus buy on these paint companies. Agam.
Well, so, a bunch of things first before I come to the Nuvama note. Just want to add firstly that we must remember that when crude falls, firstly, there has to, that the decline in prices have to sustain over a considerably long period of time in order to have any impact in terms of raw materials. Secondly, we must also consider that there is a certain lag effect that comes to play out because of various inventories that the paint companies may or may not hold at that point in time. And we may not see the immediate effects on the ongoing quarter or the subsequent quarter. Again, a lot of that will depend on inventories held by those specific companies at that point in time. That said, as Mahima's pointed out, well, we have an anti-consensus buy on paint companies by Nuvama, and they are suggesting that they in fact expect double-digit growth to return. Rural markets are picking up, so it expects demand to recover. We've had plenty of commentary coming in from the chairman of Grasim as well, where KM Birla has suggested that it is rural areas that are likely to lead growth going in. Of course, we do know of Birla Opus and the kind of expansion plans that they hold in order to become the number 2 player in India. But coming back to the Nuvama note, they are also saying that valuations are reasonable at the moment for legacy paint players, and they say that despite new players' significant resources, they do not expect them to disrupt markets. And this again is something which is perhaps expected because it is going to take Birla Opus some time before they can in fact establish their distribution network. And while they do also have plenty of plans in terms of their production, they're setting up their capacity, building that capacity in terms of the utilization. So all this will take a little bit of gestational period. And based on that, Nuvama is suggesting that in the near term, it may not see too much of disruption. Again, pricing will hold a very, very important key to how things could, of course, pan out. And well, they're saying that the further price hikes could happen if needed, and that of course always bodes well when it comes to the paint companies. But speaking of Birla Opus, I've shed some light. Perhaps Mahima can take this conversation forward here.
Absolutely. So, as you rightly mentioned, Birla Opus will take time to, eat some of the market shares that these companies have already had, because when it comes to Asian Paints, it's been a legacy player in this, field, and it has an extremely strong supply chain, and the kind of the relations that they have with the dealers also, it's very difficult to break that down. So, in terms of the commentary, especially in terms of the competition when it comes to Birla Opus, some of these paint companies did give out some commentary with respect to Birla Opus, and Asian Paints has said that new launch seems to have underperformed as per expectations. In Berger Paints con call, the management said that they're confident of their ability to compete effectively against the new market entrant. And for Indigo Paints, they've said that no changes in the competition or pricing pressure has come so far from the new entrant. And similarly, but it's of course it's important because Birla Opus is going big when it comes to capex and their plans with respect to the paints. So, Grasim in their AGM said that the company remains confident of achieving the 10,000 crore revenue, the 10,000 crore revenue that they've guided in the next 3 years. And the production capacity is over 1,200 SKUs right now, and all 6 facilities will be operational by the end of FY25 for them. And overall total investment that they've made so far is 7,000 crore. And right now their distribution network stands at roughly 102 depots. But, everything comes down to the valuation part, Nika.
Yeah, you have, it's very varied. You have some counters that are currently trading at a lower price to earnings ratio, and that's Kansai Nerolic. It has the lowest P among its other players, while Asian Paints, Indigo Paints, Berger Paints are ranging between the 49 to 59 P. Now, when you look at the forward valuations for FY25 and FY26, they do indicate a higher P. You could see Asian Paints P's go to 60, while Indigo Paints will actually moderate in terms of its valuations, and Berger Paints is likely to stay around the similar levels, while Kansai Nerolac sees the highest jump. You see 34x of P, and this indicates a slower earnings growth. But yes, there are headwinds in this space even now.
So, this is funny because if you look at the valuations historically, and I know that at least since the past about 6, 7, 8 years, Berger Paints has always traded at a premium to Asian Paints. It doesn't matter the kind of growth rates that you see, and usually growth rates match for both Berger Paints and Asian Paints. But it's always typical that the projections, Berger Paints lands up with a little bit of discount, and it just so happens that once you're out with an annual year and then another year, eventually it always just so happens that Berger Paints gets a little bit of a premium with respect to Asian Paints. What's going to be really interesting to watch is that once you have Grasim into the fold, I'm curious to see whether or not, of course, Grasim has plenty of other businesses, so naturally its price to earnings may not be as high as these, but it'll still be interesting to see whether or not there is a little bit of a relative premium, and I don't know how we're going to land up calculating that, but it's always going to be something that should be on everyone's radar. But Mahima, how are the stocks done?
Well, the paint companies have stocks in this year particularly have remained under pressure so far. In terms of Asian Paints, YTD, it's negative 5% return for Asian Paints. 1 month and 6 months, the gains have been little. 6 months, it's gained over 14%. For Indigo Paints as well, YTD returns have been like 2%, and 6 months gain have been around 9%. Berger Paints also, there's a degrowth seen, roughly 2% negative returns. Similarly, Kansai Nerolac has also seen a negative return of 8% YTD. However, AkzoNobel, which is one of the smallest players amongst all these paint companies, has seen extremely good returns. In terms of 1 month, it's gained 16%, 6 months it's gained 43%, and YTD it is given returns of roughly 37%. These are good returns as compared to the other paint companies.
Well, absolutely. These are so while returns can be mixed at this point in time, going forward, a lot will. And of course, if you look at the historical way of things, how things have panned out, we haven't seen as much of a difference. Sure, a -8% as against a 2%, and this gap can be covered in literally just 1 or 2 odd days. So there's not much to speak for. That's the point that we're trying to make here, and that a lot will depend on. The kind of individual traction that a lot of the companies can bring in terms of differentiation when it comes to their earnings going forward. And naturally, while Asian Paints is a clear leader at this point in time, we must remember that the base is considerably high, and there's a little bit more flexibility for players like something like perhaps an Indigo or a Kansai Nerolac. So that's always something to keep in mind. And of course, Birla Opus, perhaps a year down the line, 2 years down the line, we will really get a true idea of how that plays out in terms of the paint sector and the paint industry. But well, that's what we have with respect to paints. All in all, looking good, at least as far as the crude impact is concerned. But the hope, of course, would be that lower crude prices sustain, and well, they naturally also bring in an advantage for operational gains for some of these paint companies, Megha.
Well, that's what we had for the entire paint sector.